All right, guys. It is, I believe, Wednesday. This is the day after the CPI report came out. Very dramatic stuff, very exciting stuff. And obviously the markets had a ridiculous reaction. And I mean that in a good way, at least for my general thesis. So I was of the opinion that the CPI would be actually lower, so that inflation would come out maybe in line or lower than expected, and therefore the market might, at least initially, react positively, like, inflation isn't that bad, so they might not increase interest rates as badly, therefore the party goes on. Now, the CPI came out worse than expected, and the markets obviously went down pretty hard. I mean, this is sort of limit down style movements from the Corona days. But any sort of, I think anytime the indices move 4 or 5% or higher, it's a huge day. So even 3% to some extent. Now, even if the CPI came in line or lower than expected, as I thought it might, and a lot of people actually thought it might, I still think that the markets would have eventually gone down, if not that same day, Tuesday, the next day. But as it turns out, it's just absolutely vomited down immediately and continued and closed pretty much at the low of day. So let's look at the markets here. We're looking at the SPY. Obviously, I was looking for the move down to test this ascending support. I did think it would. I mean, what I thought would have happened is, yeah, we go up a little bit, or maybe we close a little red, even if the CPI came in line or lower. And then I thought for the rest of the week, yeah, we'll sort of, because I didn't think we'd hit this 420. And if we did, I think we would have come down and eventually lost this ascending support. Now, the game has totally changed. We closed down here. And by the way, today, Wednesday, we might sort of rebound a little bit because this is absolutely, this is intense. So maybe we move a bit higher today or sideways or even lower. But if we go lower, not too much lower. But, it's game, set, and match for me. The ascending support will be lost very, very soon. And then we go, like I said, so many times, then we go down, test this area, then there, then that's it, new lows. So to be honest, not to pat myself on the back too much, but the selling up here, there, coming down here, bouncing from there, I've just nailed it. So very happy. Don't want to get too, don't want to jinx it, but so far, very, very happy. And thankfully I've traded accordingly. So I made a bit of money, saved a bit of money, but my core position still go down with the market. But that's part of the plan, at least for the long-term strategy. I mean, I day trade and swing trade my positions that I hold long-term. So I'm sort of, and that, to be honest, that helps with compounding interest. So I will cover that finally in one of my risk management videos that I promised to do. So let's just look at the markets. Obviously, the markets remain closed because they open in 2 hours. I'm on holiday. I've moved from Switzerland to south of France, so I can't really time my videos in an ideal fashion. So let's look at the SPY. I'm going to go through all of the sectors today. I'm going to try and do one long video. Sorry about that, but I don't want to do two separate ones. So the SPY completely down, actually touched the ascending support, but closed right above it. So this is very weak. Like I've said, I think we might have a small bounce, but whether it's today, tomorrow, we're going to test the lows, 388, and then the day after, I don't know whether it's Friday or whether it's Monday the next week, we're going lower. QQQ, same thing. Obviously, it's always a little bit more intense than the SPY. So if it's a down day, it typically does, a little bit more of a move, whether it's up or down. And that's what it did. Same pattern, same chart pattern, same destination. Dow Jones is usually also less dramatic, not also, but less volatile, let's say, in its percentage swings than the SPY. But here, actually, I would say the chart pattern is weaker than the SPY and the Nasdaq, because it technically actually went below. Looks like below, it probably is, the recent low from what was it, September the 6th, but doesn't matter, same chart pattern. So, and if the Dow goes down, I mean, the Dow is usually defensive, So that kind of guarantees whatever hesitation we had that it might not go lower. So we're going lower. Russell usually would be also weaker. So Russell's been sort of relatively outperforming the other sectors, but sorry, if everything else goes to new lows, this has to. So no change. They're all going lower. We might have a small sideways day today, but yeah, I've said it many times, and I've said it when the market looks good. We're going to drop below this selling support across the indices, and now I think the world is awakening to it. With that said, I will also look at the DAX, because the DAX at some point was looking weaker than the US markets. I'm not going to do a comparison of SPY versus DAX, but it was looking weaker. And now today, actually, I expected the DAX to go a bit lower. I mean, it had a violent day lower yesterday, and it did react to the CPI already. But still, I would have expected a bit more of a lower move, since, in my opinion, the markets are guaranteed to go lower, and they're kind of at their ascending support. It'll probably take a few days to venture lower, but I think once the S&P, the Nasdaq, and all their bodies start to flush to, you know, their own lows. So once we drop this level and go down to this area, and therefore this area, you can expect the DAX to be at its lows, and maybe even going lower. So, but the DAX is relatively outperforming the US markets in the last 2 days, I would say. But same destination for all 5 indices that I looked at: SPY, Nasdaq, Dow, Russell, DAX. It's all going lower. Finally, let's look at the VIX, and I did notice the VIX was up the day before yesterday, yeah. And then obviously we had a crazy move yesterday. It was up 18% at some point, which makes sense, and it actually pierced its recent highs. So a bit like the Dow Jones, you know, the Dow pierced its recent lows. You can expect the volatility index to continue going higher, and maybe hitting, by the time it goes higher, it would hit this section here. So let's call it 32. Maybe 30 will be a bit of resistance by then, but 30 to 32, I think, is where we're going. There will be previous ascending support acting as resistance, but also, and maybe more importantly, because this is more credible, hitting its descending resistance here. So let's say 30 to low 30s is where the VIX should go, and then we'll see. That's been resistance for quite a few months. So yeah, we're not going to go to the March 2020 corona spike yet, but we'll go to the 30s, I say, in the VIX. So those are the first sections that that's the first section I want to look at. The next section will be the interest rates. Yeah, so interest rates went up yesterday, obviously, and actually there's a bit of continuation today. You'd expect it to drop a little bit because of the crazy move yesterday. The 1 year went up significantly. It was really the 1s, 2s, 5s going up, and the sort of the back end not going up as much. So inversion movement continues. So first year, second year, 5 years, you can see they've all, I mean, now when you look at the 2s, probably the 2s, 10s, and 30s are the most important. The 2s already broke out, continuing, even right now it's at a high of day. Interest rates are going up. 5 year, same pattern, but it hasn't taken out, but you know, it's going to take it out. The 10, probably the most important one, you know, hours or maybe days away from just breaking out the 3.5. Maybe even today it does it. You know, this week we're going to take out 3.5, and that will mark a massive, and remember where we were last time the 10-year was here. This is mid-June lows for the markets, and I mentioned this also in the last video. So it might be, and I said it, you know, we could go lower very quickly if interest rates go up. Well, yesterday's move was related to obviously everything but the dollar, interest rates, and they moved very high very quickly, and the market moved very low very quickly. So if the 10-year today, tomorrow, whatever, this week, next week, starts to take out 3.5, these guys will be flushing down here. You know, you can call it technical breakdown, whatever, everything will coincide, but watch out for the 10-year going up, and things break, markets break You know, this isn't just a pretty chart. This represents everything. There's housing, just all these debt bubbles, student loans, car loans, it's everything. I don't care. Corporate loans. Think of how many zombie companies are still walking around half dead that should have been put out of misery and not, you know, bailed out. Everything is related to these yields, and the 10-year is the most important of them all. So, in my opinion, when this starts to crack 3.5, yeah, watch out. There'll be black swans all over the place. 30-year, also a very important one, already took out its high. Well, yesterday, it's sort of, and like I said, you know, it was the ones, the twos, the fives that were really green strong. The 10 also, but the 30-year was actually red yesterday. But you know, don't worry about it. It's going up. It's just the inversion happening. So the 30-year will also crack higher very slowly, and obviously slower than the others. So rates are so important. The most important thing out there right now. You can look at the, you know, the general stock markets, but this is the most important section right now. So yeah, rates going up, with the shorter term yields going up higher than the further out long-term yields, and that's pure inversion, pure recession stuff. I've said it from the beginning. Everything's going down. Stay positive, but it's all going down. And obviously, you can maximize your profits, minimize your losses if you plan ahead. So that's rates. I want to also look at the dollar and maybe even some of the specific FX currencies. So dollar index went up yesterday. I did think, okay, we might touch this area and possibly down here, but you know, the CPI prevented any of that second level getting touched. I would say we did sort of touch this area, you know, when you're this close, that's kind of a touch. So whatever, we did that today sideways, and then the next few days we're going to keep going up. I think we're going to start running towards the 120 area as everyone freaks out, and as rates go up, as markets go down, you know, dollar is king, and even with inflation, that's just the way it is, and it's the path of least resistance. So DXY up, even though today we're sort of cooling off because of the crazy move. So today so far we're sort of going sideways and reversing yesterday a tiny bit, but nothing significant, obviously, which means the euro dollar, euro USD yesterday smashed down, and you can see that coincides with the downtrend resistance. These are lines, all the lines. I haven't drawn any today or in a while, actually. I mean, they I don't need to draw them. I believe in them, and so far they're acting perfectly. Another example here, this resistance, this probably I drew the same time I drew the DXY support. It's all perfect. I'm not going to touch it. What'll happen? Maybe some sideways movement, and then venture low. Although the ECB does want to start increasing rates pretty aggressively, so maybe we'll have not too much of a move down. But it doesn't matter. You know, I still think the dollar will be the favored currency, and the markets will still go down. But I think there'll be a bit more of a support than there otherwise would have been, because the ECB will start its own hiking. So let's see how that develops. But for now, the trend remains the same. I think we'll go sideways and venture lower as the DXY goes up. We won't look too much into the FXs, but the Japanese yen also makes up a lot of the dollar index. So as you can see yesterday, big move higher. That was very high. Today we're sort of reversing quite a bit, you know, but let's see, because actually the Japanese yen has been crushed for a long time, so we don't want to pile in too much on one side. So let's see, sideways could even drop a little bit. Let's see what happens. But I think the key is you don't want to play FX too much. You just want to have cash, and you might as well have dollars. And let's be honest, most of us are trading US stocks. So cash is king. And then buy your stocks when you think they've done flushing for a little bounce, and maybe build into your core positions that you believe in. Obviously, I'm focusing on resources, commodities, mainly, with some alternatives. But I've got at least, I think it's 50% cash at the moment in my portfolio. So very happy holding dollars as it goes up. But even if the dollar goes down 1 or 2%, I don't care, because the stocks are going down 10% a day. So it's all relatives. Then you've got to have a general strategy and a portfolio that makes sense. But that's my understanding of FX. Dollar remains strong until otherwise the trend changes. Let's move on to gold and silver. So And there's something interesting going on in silver for sure. Gold went down. I did notice that gold had not moved up too much, and the day silver went up 5% just 2 days ago. Gold was pretty subdued, and then yesterday, predictably, with everything going down and the dollar going up and interest rates going up, gold got smashed, closed pretty low. This is not looking too good for gold because, you know, we're at that all-important 1680 area. We're staying there too long, and normally we don't stay there too long. And this will be a 1, 2, 3, 4, quadruple, whatever the word is, 5, 6 times we're hitting this area, and you can best believe that we'd flush it. And you know, it wouldn't be that dramatic because gold has been so strong. I mean, think about how strong the dollar is. The fact that gold is up here. How much are we down on gold from the all-time invasion highs? 20%, not even, it's nothing. You know, the stock's going down 20% a day. So, I mean, where would we go? I don't want to go too much into gold, but you know, once we start losing this section here, when the real flush is happening in all markets, you'd be happy to hold gold. I mean, look, this would be a dramatic move down to 1580. Like, what the hell, 1580? That's so low. Yeah, that's just 5%. You know, that's nothing. Even if we go down here, I think we'd go to possibly here at the lows before gold is bought strategically, you know. So 1500, 1480. By then, because we'd be several days, weeks, months in, by then we'd be hitting the ascending support, which I don't think will be surpassed. So, I mean, gold very strong, very long term, but you know, in the short term, weak expectedly, also relative to silver, which I'll look at in a second. But I mean, look, even if you were to go down there, 50% is nothing. And from the highs of the Russian invasion, 30%. Yeah, it's something, but compared to everything else, it's great. So gold is good, which is why I'm trading long term, taking long-term positions in the stocks, but obviously avoiding the massive flushes in the stocks, which is why I'm doing my very detailed intraday videos to show you why I think movements are going to happen. So that's gold. Let's look at silver. Let me just zoom in a little bit more for go back to the daily for gold. Just to show why I really think it's going to flush if everything continues as I think it will. So, well, yeah, just to stay on gold, we come lower with the dollar going up and the market's going down. Maybe a bit of buying as fear really starts to set in and the market's going down. But I still think we drop, and then we'll see. But let's just say it happens in a few days. I would probably go to 1600 first. You know, I don't think we'll take out 1600 straight away. So that's gold. Silver, very, very impressive. Normally it would be down a lot more than gold. Yesterday it was hardly down. That's not much of a red day, especially if you consider the huge move up it had. Remember, we sold into that. And like I said, you know, the day it went up, for me, silver has shown very meaningful support down here. This move was crazy. I don't know the reason. You know, lots of sort of dramatic headlines suggesting the Russians are going to crack the currency. I don't even care. Actually, I've learned to not care about news at all. The price action is what the price action is, and then whatever the news event is or the rumor is, they'll just attribute it to the price action. So I don't care about news anymore, unless it's very important news like CPI or whatever. But that's different. So silver very strong. Today is also bouncing back. Like I said, everything is sort of reversing a little bit of yesterday's move. But yesterday's move was not that bad in silver, especially given the huge, what was it, 6% at some point, going for $20. Jesus, we touched 20. So what do I think is going to happen? Well, normally, if it was sort of nothing crazy happening, we'd be going sideways, break out of this, and very bullish. Now, if we have gold breaking down, I'm sorry, silver has to come down. But I think it will be very strong on the way down. I think it won't. Well, put it this way, I'm going to be buying and I'm going to be hoping that silver goes back down to 18. I'll be buying just above 18. And if it goes lower and flushes, I'm going to be buying all the way down. I love silver now. I've always loved it. But with what it's done the last few days, especially this day, it's a buy the dip. So silver miners is how I'll play it. I'll be very aggressive on this one. So silver is strong, although I'm hoping for it to come down, and it should come down as everything comes down. I'll just leave it at that. We'll have more days to go into in detail, but I think that's pretty much in a nutshell. Let's look at the miners. Now, the miners were down pretty strong yesterday. Let's see the GDX. Again, following general markets. Now, I sold this move. I sold it the day it was there, and the next day I sold these 2 days here. I'm very happy to have done that. And obviously we ended much lower, closed middle of days like the general markets. So GDX down, GDXJ, same sort of chart pattern down. What will happen? Well, we'll come down with gold, with silver, with the market. So we'll flush to new lows. But these miners, I feel like, are more at a bottom than the other indices. So if I start seeing relative strength, especially with what happened in silver, I'm going to be buying these stocks, especially the good ones. I like to think that my portfolio is made up of the good ones, but I'm not going to be buying these speculative ones that, you know, could go bankrupt and waiting on drill results and all this stuff. I'm talking about the new ones, the Nico Eagles, the Gold, Barrick Golds, the senior boys. And when it comes to the more aggressive juniors, I've already got them, and they're also part of the ones that I sold. I'll go through them. There are a few stocks I still want to own, still want to buy, some of the gold and silver ones. But I generally think my portfolio is full of the best. And I don't want to have too many, don't want to have too many stocks. You know, the more spread out you are, the more spread out your focus is. And yeah, he who defends everywhere is weak everywhere, as Sun Tzu said. So if I do want to add a few more, I might want to get rid of a few, but to be honest, I'm pretty happy with what I hold. But I'll go through that when I go through my portfolio. It's just to say the GDX, GDXJ, weak expectedly makes sense, and I think it will continue, and I hope it does, because I plan to buy more. If I do buy more, it will be down at just above the lows, depending on what happens with silver primarily and the other barometers, you know, the dollar index, the markets, all that stuff. If I think the market's going to flush to absolute new lows, I might actually avoid buying here if it's too obvious to me that 28 will be lost in the GDXJ. So I'll also look at SILJ actually. I used to look at it a bit more, but I stopped because I like to keep it simple. But to be honest, with what happened in silver, these are the silver miners. And but anyway, same chart pattern, so I don't need to look into it too much. But I will be looking at that a bit more as silver nears 18, which is what I think will happen. So now yesterday got destroyed, not too destroyed compared to other stocks, but I was very happy to see it get destroyed because I took profits and I like to buy it. It's cheap, and generally I've been lightening up my portfolio for some time. So I have these sort of 3 modes. I have this light, medium, and heavy mode, and I've been in the light mode for some time. And as the market went higher, my holdings went from light to medium automatically, and I trimmed that 2 days ago on that big move up. So I'm very happy, and it makes all the difference. So Barrick Gold, very strong relative to the others. It's a defensive play. It's a senior holding, that's what we expect. Newmont, even more so, held it for some time. I accidentally have too much of it, but to be honest, it's acting very defensively. So very happy to see that down 2%, which is basically 0 to me. Agnico Eagle has been very strong. Did not take profit over here. And in fact, on these 3, I did not take profit. They're senior holdings. I like them, and I want to buy more of them. I think I just mentioned them, all 3 of them, as ones I would buy on the drop. Wheaton, I don't think I sold that one either. I probably should have. Maybe I missed my sell or something, but it's one of the seniors, don't mind. Pan American Silver, I did sell 1669. You can see here, remember this by heart. It was one of the ones I wrote down on my thighs in the car whilst we were driving. So very happy to see that go down. It will go lower as the silver goes lower. Maxil, I missed this one. I regret missing it. I think I was a bit too greedy. Missed by a few cents. Honestly, if I was at home trading, I would have got that one. Yamana, very small position, did not sell it, although I should have. But whatever, I have a This will merge with Goldfields soon anyway, so, and it's still above my buy. Goldfields is at my last buy. I've been buying it down this channel. No problem. It's a new position. It's low holding. It's a senior stock. It's great. Want it to go lower. First Majestic, trimmed it up here. Absolutely beautiful. Going lower. Maybe I'll buy at 7, but I think everything will go lower. I'm in no hurry. Fortuna sold it up there. Going lower. Can't wait to buy. These little guys down here, they make extraordinary moves. So I'd love it. So when you sell sort of 20% of your position, you know, like I did, and then it goes back down there and you buy back 20% or maybe 30%, you add more. I mean, these little swing trades here just make so much money difference in your portfolio. So I'm loving this. Go back down, please. EXK, I think I sold EXK. I think I sold all 4 of these. Otherwise, it was 3. And if I did, it was there. I actually don't know about EXK. I think I did. 325, whatever. Again, if I didn't sell, I think I did. If I didn't sell, I'll be buying there unless I see the market going back down. Look at this channel here, beautiful. Zoom out even more. Where can it go? I don't know. We'll see. I'd love it to go down there. It's a beautiful stock, long term. I've been speaking about that before. This huge move. I sold into the huge move. I sold it on this day at $3. Normally I'd sell it at $2.99, but I think it was at 3 pre-market or 301. I took it. Next day went all the way up there, sold that. Beautiful, all the way back down. Still above my first sell. I want it all the way lower. I'll buy more. You can see a pattern here, just absolutely swing trading with long-term investments. TPIFF 282, sold that. I'd expect it to have come down more, but like I said in other videos, there's some good news into this. Strong. It doesn't belong down here. If it does, it's a gift for those that know the stock. And I Colombia, I'd love to buy more. Absolutely loving it. These 2 stocks, for some reason, just acting closed the last 2 days. Don't care. Fortitude, this one I noticed it pretty weak. It didn't move up when the whole sector came up, so I bought some at 601. I've left it since. Now it's going down, and I said in previous videos it might go to 5. I'd buy at 5. 8% dividend stock, great company. Rain of Silver sold some at 26 on the day of this pump happened. I just bought some down here at the absolute lows at 21 and 22. I sold at 26, then found out the news. Again, I don't care about the news. I see something going up like this, 17% in a day after I bought it. Ciao, I sell it. And then there seems to be news. I think I tried to sell it here, but I was, I don't know, in some sauna or something. I missed it. Although I saw a little alert, there's more news drill results, so this could actually move up today. And if it does, I think I'll be selling it here unless it opens higher. So I'm going for some 32 sell on this. Good company. Don't know it too much, but I remember buying it, thinking it's good. And that's it for the gold and silver holdings. Yeah, I'm very excited. Everything's working out perfectly. Honestly, it's been happening like this just day after day. And I'm happy I have video proof of it because, my God, so many channels where everyone just goes on and on, and it's just too vague, no direction. They're just, there's just not enough detailed content out there, which is why I did this. So I hope you find this enjoyable. I want to do a separate video on crypto because I've been following that too. I have my opinions. I have a position in that too, at least in HIVE, very light position that I sold all the way up here. Wanted to buy back, saw it go up. I don't like to chase, but now I'll cover crypto now actually because I don't want to do all these videos whilst I'm on holiday. It's not fair to my girlfriend or to myself. Crypto was wild a few days ago, so it had this crazy move. I did say, I mean, I thought it would come down and actually keep going lower. But when the market starts to rebound, what do you expect? Bitcoin is like a magnification of the markets, like especially like the Nasdaq. And then, and perfectly with this trend line, as happens so often, we go back down. I think yesterday's move was down 10%. I loved seeing that because I want to buy it cheap. Maybe not Bitcoin, but the miners. like HIVE and RIOT and Mara, but maybe I'll buy some Bitcoin and Ethereum. What I got wrong was Ethereum. I thought that Ethereum here would go up and test 2000 with Bitcoin, and actually it was a bit of a buy the rumor, sell the fact with this merger. I don't follow too much all these, like I said, news, but also the Bitcoin news, the Ethereum merger 2.0. But it looks like it was a sort of sell the news. I don't even think it's happened yet. But anyway, the rumor was overbought and actually it underperformed for the last few days. And it doesn't even matter, to be honest, because if Bitcoin does like you would think that I would expect it to do, just go low with the general indices, then Ethereum has to go down. It might have 1 or 2 days where it outperforms because the mergers happened. But otherwise, all crypto, I mean, yesterday, all cryptocurrencies were just trashed. And again, I like to see that. You'd expect that. And today, I would even call that a bounce. It's just sideways action. And then as everything goes down, you'd expect it to test its sort of 18,500-ish zone, maybe just hover there 1 or 2 days, and then go lower, and then all the way down. But that will take several days. There's quite a few support, today, mini support, down here, little support, down there, little support. But ultimately, as the S&P goes to new lows, obviously Bitcoin will go down, 13,000-ish, I think is support. And then after that, 10, after that, who knows, 6, 7, 8. That's everything. I don't want to make a long video, but I wanted to cover everything quite thoroughly today. I won't go through the crypto miners. They'll just follow Bitcoin, let's be honest, and the markets. That they really get crushed. When the market goes down, I mean, and Bitcoin goes down, then you'd expect the Bitcoin miners to go down too, which is what they did. The market remains closed, so you could see the type of movements we had yesterday. Basically 10% on average, some of them more. So yeah, you can see the chart pattern down there. Once we go to that 18,500 zone in Bitcoin and then lower. So that's it. I hope you found it of value. Please subscribe and all that stuff. Notifications, comment, please. I like to have some interaction. Make sure it's actually of value. I got a few scammers commenting, and I'm almost making friends with them if there's a lack of comments. So anyway, good luck out there. I hope it was of value. Thank you.